Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 323 on May the 17th, 2024. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on SoundHound AI, Bank of America, and the KraneShares CSI China Internet ETF. And we discussed three new trades on ChargePoint Holdings, the Proshares Bloomberg Natural Gas ETF, and Robinhood Markets. And it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, these markets are at all-time highs once again. I remember when there were books about the Dow reaching 40,000 points. Well, today we closed above that level for the week. The Dow Jones Industrial Average grew 490 points, closing at 40,003 points. The S&P 500 index grew 80 points, ending the week at 5,303 points. And now it's time for the topic of the week. The topic of the week is the next trade. Picture this. It's Monday morning. The market just opened and you just heard some economic news. What should you think about? What do I think about? The next trade. You might be feeling pretty good because last week was one of the best weeks in your whole life. What should you be thinking about to have an even better week this week? The next trade. Or maybe last week just sucked. Maybe it really sucked. Yeah, one of those weeks that make you wonder why you think you could even be successful at trading. What should your mind be on? The next trade. It doesn't matter what happened in the past. You may have had a $1 million profit day like a rock star hedge fund manager. You may be down to your last $1,000 in your account. It doesn't matter. The past already happened, and to be honest, no one cares. It's all about the present. Right now matters more than yesterday. Do you remember that song from the 80s? What have you done for me lately? That's what the market is saying to you right now, except it doesn't sound nearly as sweet as Janet Jackson. It's laced with cynicism and a bit of irreverence. I love it. This is the hardest part about trading. It's not figuring out the perfect strategy or even analyzing the markets to anticipate the next move. It's all about what your next trade will be. After a winter, you might be more prone to make a mistake because you forget that you can even lose. Confidence turns into pride and arrogance really quick. After a bad trade, you might have the wind knocked out of you a bit. You're so worried about making another bad trade and experiencing another losing day that you just ultimately end up losing money again. This is the reason why people start to use algorithms to make trades rather than humans. They want to eliminate the emotion, and algorithms only have numbers, not emotion. I don't know how to make myself perform like a robot. Thankfully, I don't have to think about that at all. All I have to think about is the next trade. All right, let's get into the trading review of last week's trades. We're going to start off with our covered call. We looked at SoundHound AI Inc., symbol S as in Sierra, O as in Oscar, U as in uniform, N as in November. At the time, the stock was trading for $5.09 per share. I looked at buying that stock and selling the June 5/2 call at 40 cents, which could give us a return of 15.91% in 6 weeks. Well, shares of SoundHound AI finished the week nearly unchanged, down 3 cents at $5.06 per share. The call option we sold didn't lose any value, leaving us with a net loss of 3 cents if we were to close the trade out immediately. Now, in all fairness, the ask price of the call option today is the bid price last week, which means the call option's midpoint or real value has actually gone lower. Still, this trade is going to require a bit more time. Given that we hold these until expiration anyway, we have 5 more weeks of patience to see how this trade fares. No adjustments are needed at this point. Just track the stock in case, you end up needing to make a defensive adjustment in the coming weeks. Next up, we have a credit spread on Bank of America, symbol B as in Bravo, A as in Alpha, C as in Charlie. At the time, the stock was trading for $38.45 per share. I looked at selling the June 38-37 put spread at 33 cents. That could give us a maximum possible loss of 67 cents per spread. Well, shares of Bank of America grew 86 cents, ending the week at $39.31 per share. The out-of-the-money put spread that we sold is now even more out of the money, and the spread will continue to lose value if shares push higher in the coming weeks or even just stay above the current, stay near the current price. So no adjustments are needed on this trade at all. With prices pushing higher, we'll be making even more money on this trade, and that's because the trade is going to slowly decay all the way to zero, which is great. It's exactly what we want. So this trade worked out. Very nice. No adjustments needed on this one either. And then our final trade from last week was a debit spread on the KraneShares CSI China Internet ETF. Symbol K as in Kilo, W as in Whiskey, E as in Echo, B as in Bravo. At the time, the stock was trading for $30.10 per share. I looked at buying the June 29-30 call spread for 61 cents, which could give us a maximum gain of 39 cents, or that's a 63.93% return in 6 weeks. Well, shares of the China Internet ETF gained $2.15, ending the week at $32.25 per share. The in-the-money call spread that we bought is now even more in the money. The spread is definitely working out as planned, so no adjustments are needed on this one either. We still have 5 more weeks until expiration, but so far, so good. So that's it for the review of last week's trades. Today, of course, Friday, May the 17th, was expiration for all monthly options in the month of May. The new trades on today's show will use the June 21st expiration for monthly options in June. So let's go ahead and get into our new trades. We're going to start off with the covered call on ChargePoint Holdings, symbol C as in Charlie, H as in Hotel, P as in Papa, T as in Tango. Stock ended the week at $1.91 per share. I'm looking at buying stock and selling the June 2 call at 21 cents, hoping for a return of 15.71% in 5 weeks. Now you enter this trade by buying stock for $1.91 per share and selling the June 2 call at 21 cents. This trade makes the most money if stock prices finish above $2 per share. The break-even price is $1.70 per share, and in real terms, the stock purchase will require $191, and you'll collect $21 for selling the option. Next up, we have the credit spread on the Proshares Trust to Ultra Bloomberg Natural Gas ETF. Symbol B as in Bravo, O as in Oscar, I as in India, L as in Lima. The stock ended the week at $19.49 per share. I'm looking at selling the June 18-17 put spread at 36 cents. That could give us a maximum possible loss of 64 cents per spread. Now you enter this trade by selling the June 18 put at $1.48 and concurrently buying the June 17 put for $1.12. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $18 per share. The break-even price on this trade is $17.64 per share, and in real terms, you'll receive $36 per spread that you sell and have $64 at risk. And then our final trade for the upcoming week is a debit spread on Robinhood Markets, symbol H as in Hotel, O as in Oscar, O as in Oscar, D as in Delta. The stock ended the week at $20.08 per share. I'm looking at buying the June 19-20 call spread for 60 cents. That could give us a maximum gain of 40 cents, or that's a 66.67% return in 5 weeks. Now you enter this trade by buying the June 19 call for $2.31 and concurrently selling the June 20 call at $1.71. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $20 per share. The break-even price on this trade is $19.60 per share, and in real terms, you'll pay $60 to enter the spread, and your maximum gain is $40 per spread. So that's it for this week's show. Thank you guys so much for listening. Thank you for those of you who have emailed questions to me. We definitely had a great time with the technical analysis Q&A last week. That all worked out well. We recorded it on Saturday. I'll get it posted here in the coming day or two. But if you have any questions about the technical analysis workshop, or even about just how I trade and how you could become a better trader, let me know. Shoot me an email, and I look forward to having a call with you sometime soon. All right? Have a wonderful weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.